All right, let's go ahead and recap the trading day, which is Wednesday. But first, let's analyze the week that we have so far because we want to see what's going on the high time frame in order to anticipate what days of the week we should actually come to focus on the charts and trade. So, what do I mean by that? We're on the hour time frame, and coming in, we want to see what Monday has done in order to formulate what we're going to potentially do. So Monday is typically a no trading day. We just want to let that play out. And what do we have here on Monday, which is Q1 of the weekly cycle? You can see that we have a monthly and a weekly cycle SSMT, meaning that we have manipulation in Monday. Now, in order to confirm that this is manipulation, we want to see distribution follow through in Q2, which is Tuesday. So coming into Tuesday, some of these trades, you could have either missed a boat because it happened in Asia and London. Coming into New York was a little bit tricky on this, but you could have caught some continuational downward trades in order to finish taking out this low, right? But if you didn't trade Asia or London, the New York session could have been a little bit tough. However, the point is now with this distribution down, we can most certainly confirm that Monday is manipulation. And now we have distribution in Q2. This is a rare and uncommon sequence to happen on this higher time frame. Now, what is the next sequence? What are we waiting for from here now that we have this information? So we're expecting Wednesday, which is today, to be high time frame accumulation, meaning we're not anticipating a retracement of this leg yet, right? Not in Wednesday, potentially Thursday and Friday. We'll be looking for those expansion moves. But let me just draw this out really quickly. We're anticipating to stay in the range. Now, as a reminder, this is high time frame. So these back and forth moves within this high time frame accumulation can be quite large. They can be tradable. So coming into today is a cautionary day. Same thing as coming into yesterday in the New York session. It is now a cautionary day because the train has already left the station. It has already distributed. It's going to be tough towards the end of that, right? So now that you got the idea of what we're looking for Wednesday, accumulation, and then Thursday, we're going to expect manipulation. And then Friday, we can, Thursday, we're not expecting manipulation. Thursday, we're going to expect continuation or reversal. Excuse me. Then we're going to likely get a nice, better play on Thursday for the expansion. And then possibly on Friday, it is a day that you can leave alone, but in this example, if Thursday can expand the range, Friday can continue or just kind of do a retracement of Thursday, if that makes sense. Anyways, now you excuse me, now you know how we've come up with the idea that today was going to be accumulation. Let me get out of replay really quickly and look at what we have occurring. It is not expanding, it is accumulating sideways. However, because it's high time frame, the expansions back and forth can be tradable. You just have to be cautious because if this was a tight back and forth, very aggressive, then it would be a terrible day to trade, right? So that being said, let's go ahead and drop down because now we know what we're anticipating. Armed with that knowledge that I have just mentioned, right? We're going to drop down to our trading time frame, whatever time frame that you trade on. and we're going to dig a little bit deeper. So let's go ahead and enable some of these other cycles. So coming into the day, we want to see what the sessions have done. So let's go ahead and turn on the daily separators in the indicator so that you can see what I'm referring to. And I'll even turn on the daily boxes so that you can get an idea of the sessions. What did Q1 do in Asia? Q1 is sideways action, it's accumulation. What are we going to expect in London? We are going to expect London to manipulate. So if we have accumulation, we're going to expect AMDX as our sequence for the sessions, right? So you know if Asia accumulates in Q2 in London, you're going to look for manipulation, which it manipulated the lows, and that was a tradable setup there to then take out the highs. If Q2 manipulates, what are you going to anticipate in Q3? Distribution, right? So now that we know this is a distribution quarter on the daily cycle, we're going to now drill down to the 90 cycles. So let me turn on the 90 separators, turn off the daily, and turn on the 90 so that you can see what I'm referring to here. So now we're digging a little bit deeper into our New York session. Well, now we know what to expect. We know we're going to get some sort of distribution here, right? And if London manipulated to the downside, and it did in fact begin distributing in London, this can be considered a pullback, right? And we're still bullish to continue a distribution move. So what did the first 90 cycle do in our New York session? It is accumulation. So now we have another AMDX cycle for the New York session. If the first 90 accumulates, we're going to anticipate Q2 to manipulate and then get distribution in Q3, and then either a continuation or reversal in Q4. Look how perfectly the sequences align, right? Now, if you have accumulation here and you're anticipating manipulation, if you're still bullish, you want to see these lows get swept. We did not get a manipulation to the downside. It, however, finished the distribution phase of the daily cycle, and this is where the indicators are going to come in. Now you know where it's going to go. Where is it? Let me rewind price to here now. Where are we accumulating? We're accumulating at the hold flip zone. You know this is support. If this is a retracement to then continue the move higher, the hold flip zone is where you're looking for a bullish setup to continue higher. Where are you going to take that move? To the next level above. I hope that makes sense. What do we have at our hold flip zone to get us into this trade? Fox Hunt. Fox Hunt spots the reversal sequence that you're looking for. You enter in, stop at the lows, and you ride the rest of the distribution up. However, on a much higher time frame, because we didn't manipulate lower and we're expecting manipulation, remember Q1 is accumulation, so we're expecting manipulation here. If it did not manipulate lower, this entire leg can be considered your manipulation leg. Now, going back to the beginning, for this day in particular, what are we anticipating? A high time frame accumulation, meaning we're not going to retrace to higher prices today. If we're not going to retrace to higher prices today and we're going to stay in a compact range, what is this leg? It is manipulation higher to then bring us all the way back down back into the range. Does that make sense? Now we can be in our high time frame accumulation. We're anticipating all of this. We already know. But this was a very good long setup pre-market. If you aren't at the charts at this time and you missed that trade, do you feel like you missed a move? You have to get over those things because there's another trade opportunity always coming. So now let's fast forward because we want to see in Q3, if this is manipulation, we're now anticipating distribution in Q3. If we manipulate to the upside, where is distribution going to go? Back to the downside. So do we want to enter in right away here? No, we need to wait for a reversal sequence. We need to wait for a reversal setup. We need to make sure that it's failing to go higher. So let's forward price here. It is starting to push up and we don't get another sweep. It just failure swings there and starts reversing back down. What do you get here? Another fox hunt signal spotting the reversal sequence, letting you know, get ready. This could be a bearish setup here. And you're anticipating a bearish move back to the hold flip zone. Why? Because that is where the high time frame range is. We're expecting a move to come back here. And we're beginning to reject from our level here, right? So we want it to get underneath and break down. Fox Hunt gave you the entry. This is your entry candle right here. Stop at the highs. And then it proceeds. If you didn't catch that initial first entry on that first candle, you're going to wait for a retest, which it pops back up, rejects. That is a manipulation wick, retesting the setup. That is your entry there, or the following candle you enter in and you're targeting the hold flip zone, these lows here. And I personally wouldn't anticipate a rotation from here. I would like it to come back to the hold flip zone and kind of stay in the accumulation. So I would for sure be closing out the trade after it took these lows in that example. But as you can see, it ran perfectly all the way down. Now, we got our AMD sequence. We got our distribution. It is very clear. What are we anticipating in Q4? Either a continuation or a reversal. What is more likely? A reversal. Why? Because remember what we said at the beginning. We're anticipating high time frame accumulation, meaning we're going to stay in this range. So can we anticipate for it to fall off a cliff even more? No. For the same reasons, we're not going to anticipate for it to retrace all the way back up. We want to see it come back into the range. So we're going to anticipate this is not going to be continuation. It's going to be a reversal in Q4. So if you missed that long, you had a short opportunity here back to the levels. If you missed that short, now you're approaching another long situation to bring you back into the range. You see how it all is tying together and making sense, right? Now, approaching the lows, now we have a two-stage SMT here, a daily cycle and a 90 cycle. That is letting us know that the lows are being placed, right? We have to turn on the PL3 indicator. We have to wait for bullish high time frame sweeps. Now, we do have bullish high time frame sweeps, but obviously those have been taken out. So we need fresh reversal swing points on a higher time frame to show that we are conducive for that theory of it coming back into the range, which it's supposed to, right? So we're not going to enter long here because this is too early. We don't have bullish high time frame swings yet. We don't have anything bullish yet. We're just approaching levels and we're getting an SMT. So you're not entering in any of this yet until it sweeps. It swept the lows. Now you're interested in long setups. Why? Because we're at our level. That's number one. We have a two-stage SMT bullish in our level. That's number two. And now we're getting bullish high time frame swings formation forming exactly where we expect it to, exactly at the timing that we expect it to. So how are we going to approach this trade? We want to take a partial here, taking out this internal liquidity at our level. So it would make a lot of sense for a price to come back to here at the least and take this out. And then we're also anticipating this high getting taken and potentially coming back to this level as a rotation and then dropping back into the range, because again, we're not expecting any very large expansions going back into that downward movement that we had on Tuesday yet, right? So coming in here, we want to see displacement, but we want to see displacement get back above that change in state of delivery, right? I can turn off the 90 boxes because we don't need them anymore. And as you can see, we're not yet closing above there. So we could have entered in here if you really had high conviction, but we want displacement out. It's pushing lower, so we're starting to create order blocks here. So now we need to pay attention for any bullishness. We have another down close candle, and that is where I entered that last downward candle. If the next candle pushes above, that is your order block. And with the SMTs at the lows at our level, this is high probability with the high time frame bullish swing formations. So now we know we can enter here. This order block is going to be our protection, and it shouldn't take out this low again. So stop is at the low. We don't have any fair value gaps yet or anything, but that is exactly where I entered on the creation of that order block. If you can't see it as I'm talking about it, this downward candle is going to be your order block. So you can enter, and if price does come back, it should hold to then push up. And then the rest is, I think we got frozen here. Oh, there it goes. Okay. As you can see, very nice entry, pushes out with no retest, takes out the level that we anticipated it. Nice partial here. If you were in heavy enough, you could have closed the trade there as well. That's a nice move. We want to take level to level because we know those are where it's going to be drawn to. However, if we do get a push back above, we know we're coming here. This is where my terminus was. And I closed the trade out right there. We're so close to terminus. The majority of the trade is done. And I do not, because again, we're not anticipating for price to take out these highs and get back above up here somewhere. So it could reject here and just kind of stay in the range, right? So if my terminus is here and I'm so close to it, I'm just going to close the trade. I'm not going to fight for this little last bit. However, it does hit the level. Eventually, you would have to sit through all of this. Boom, right there, hits the level. You're out of that long. And now what? You're expecting, again, price to then come back into the range. We're not anticipating the highs to get taken or the lows to get taken. We want price to kind of stay in here because we know on the weekly cycle, today should be high time frame accumulation. Hopefully that makes sense. So right here at our level, we're getting a bearish SMT, exactly where we expect it to occur. You want to verify that that is the rejection. You don't want to enter in early yet. You want that SMT to get set. What do you get? Now you get another fox hunt that is showing you the reversal sequence has been picked up. This is your entry SMT there. Stop is at the high. You're at the level. Bearish hourly swing formation. And this is also candle 3 on the higher time frames here. So with your bearish hourly swing formation, you can understand that you can get the move back down to take this internal range liquidity. On this trade, I would only anticipate it to come to the hold flip zone, not back down to the lows. So that would be my target there. And we can see that this guy distributes all the way back down, and then you get another continuation fox hunt there. If you missed the first one, there was a bullish fox hunt there, but we're not going to pay attention to those because we're bearish here. We're not anticipating any bullishness. We only want bearish back to the zone, so that you would be out of that trade. And then that is where price is going to more than likely consolidate for the rest of the day and not expand anymore. And if we go back to our hourly time frame, let me turn off some of this stuff here. Sorry. We are getting that high time frame accumulation that we knew and anticipated was coming. So very good day, everything aligned. And this is the power of aligning QT into your trading, because now you can understand what's going to happen, right? And then you can align your setups with those concepts, with those phases of delivery. So any questions, let me know. Hopefully that was helpful and breaking it down so that you can understand what's occurring here. And tomorrow I am anticipating for it to expand out of the range.